Hey guys, Adam here at DirectionTrader.com. Let's do an overview for our day trading strategies when trading inside of the previous day's trading range. Times like now, we're in late July. The last couple weeks we've been trading kind of sideways, not really pushing up, not really pushing down, just up days, down days, but mainly staying pretty well sideways and consolidating a little bit. What we have here is a 15-minute anchor. This is a snapshot from today, guys, around 8:45 Pacific Standard Time, so just before lunch, right before the live trading room was wrapping up this morning. I took a snapshot and I wanted to show this in today's video, and then here in a little bit I'm going to show the actual live markets and see how the day ended up working out. So as we see here, this is a snapshot at 8:45. Like I said, up here we have the S&P E-minis. We mark up in a sideways market. It's pivotal to mark up your previous day's high, previous day's low. The most important levels when trading in a sideways market. Typically, if you have a bounce off the previous day's high, 80% chance, where's it going? Right down to the lows. So it's good to know in a sideways market. This example here I took right before lunchtime. I took a snapshot telling everybody what the target should be and what to look for. As you see here, we got a little head fake out of the previous day's highs here on the S&P. Now, I was telling everybody before lunch, don't panic, don't start buying this because this market's been trading sideways for a long time. Don't just assume any type of bounce out is going to be whoop, off to the races. Don't ever assume that. Anytime you get a sideways market, the first thing you want to do is if you get a breakout, make sure it's not a head fake, and then right back down to the previous lows, which is what we typically try to do, especially trading sideways range, guys. This level's been held over time, so I was saying watch it, wait for us to get back inside of this range, guys, and sell it. Where's your target? Very simple, guys. First target, or your main target, is always going to be here in the middle. After that, if you have multiple contracts and able to hold a little bit of risk, because it is going to get choppy in here, typically reverses. Sometimes we'll head on down. You could hold for the final target. But what I was saying is how to find that main target. Your first target's gonna come right here in the middle in this chop zone. All I did was simply from the lows to the highs. Basically, we have yesterday's high, yesterday's low. Find this mid-range. All I use is my magic Fibonacci tool, guys. Pretty standard stuff. This is 38 to 61%. I got a little box here I had drawn earlier. This would be the target, final for target. All that is the halfway point in between the previous day's high and low. You'll have bulls and bears fighting there for position, so you're better off just taking your money, taking your pound and flesh out of the market, and moving on. Same thing happens down here. As you're looking at the Russell, we had this head fake, and I said, guys, if we get back down inside of this previous day's low, trade it back down to the exact same setup, guys. It's the same thing. Pick your poison, whether you want to trade the S&P, the Russell, it doesn't matter. And the same thing applied to crude. Only thing is, you're going to notice later on when I show you the live markets, crude never did make it down below these highs. These previous days highs, the crude never made it below there, so guess what? We had no opportunity to sell it. Guys, going back over here, guys were asking me, so if it is going to go back down to here, do I just sell it up here? And I said, absolutely not, guys. You got to wait for it to get down inside of that area, inside of that value area. So wait until it gets down inside of that previous day's range, and then take some type of price pattern. A pullback is typically what I would take in that situation, and just wait for it to get down to retest the price levels. So, that being said, we'll look at the euro. We actually looked at this live and traded this live in the market today. What we were doing is the exact same thing to the opposite direction. We have previous day's low marked up here, previous day's high marked up here. What happened? We had a little head fake below the previous day's low. What do we do? As soon as it broke up above, look to go long. Where was targets taken? Right here. Not too bad, right, guys? Fairly simple. Fairly simple. It's a great trading strategy, guys, especially for these sideways trading ranges. You get the market trending up. You know, this obviously isn't going to work because in a trending day, you're going to break through these highs and then continue to break higher and higher and higher, which you got to use a different strategy for that. But in these sideways choppy markets, mark up them previous days ranges and look for them price patterns, and them targets are there for the taking every single time, guys. let's hurry up and bounce over here and check out some live markets, and I'll show you what was going on here. Here's where we were when I took this snapshot. We were right about here. Market had a little head fake and it was rolling over. What I said was anytime you break below, let's take a pullback. And where was the target? The target was 84.50. Sorry, 84.50 on the ES. The market went all the way down here to 84. Luckily enough, this kind of makes me look good because the market ended up reversing exactly at that price level that I put before lunchtime. I talked about that 84.5 down to about the 82 level. Start taking profits in there. Sure enough, this thing came right down to 84 and then turned right back up. Let me go ahead and show you what I'm talking about. And it turned right back up. Same thing applied. Where did this thing go? Went right up to the previous day's high. Right back to the downside, didn't it? Where did it end up? Inside that 84 to 82. Not too bad, right, guys? Previous day's high, previous day's low. Let's go over here to the Russell. The Russell, you'll see I took that snapshot right here. I took that snapshot right here before the lunchtime, and I said if we get down below them previous day's lows, what are we going to do? Go down to that halfway point, which came at 42 down to the 40 area. Another one makes me look really good, doesn't it? So, it doesn't work perfectly every time, guys, but as far as a reversal point, that is the perfect place to start taking them profits once you get down inside of that previous trading range. Look for that halfway point, look to take profit there, because guess what? There's a lot of people that notice that, oh, halfway point between the previous day's low and previous day's high, it's a good buy area. So it's a great place for us to go ahead and take profit in this type of situation. And I told you I would show you the crude right here in the crude. We're looking at right here is 8:45. This is about the time that I took that snapshot, and I said if it gets down below previous day's range, you see this is the previous day's high, we would sell it down to our halfway price point. Did that happen? Nope. This thing stayed up and didn't give us any opportunity. So basically that situation kind of went by the wayside and was thrown out the door. But guys, I promise this is one of the highest percentage strategies I use. It's great for day trading, especially in sideways ranges, and we are in a sideways range right now on the indexes in several markets. So if you have any questions about this, don't hesitate to write me. Send me an email, adam@directiontrader.com. We'll go over this. I'll answer any questions. If not, come to the live trading room. This is stuff we do every single day, and come watch us do this live in real time. So that's it for today, guys. You have a good afternoon, and come to directiontrader.com. Bye-bye.